In this video, we'll be going over IRS Form 1040X, Amended U.S. Individual Income Tax Return. So each year, the IRS reports that about 3 million taxpayers will file an amended tax return each year. So that's about probably 1 to 2% of individual tax returns that are filed. They can be filed for any number of reasons. Usually it's because a tax form came in after the taxpayer already filed his or her tax return. That's usually one of the more common ones. If it's a simple math or a clerical error, usually what will happen is the IRS will make that adjustment when reviewing your tax return and send you a notice that adjusts the amount of your refund or the amount of tax that you owe. So we're going to, in this situation, go through your an amended tax return for John Doe and his wife, and we'll walk through each of these things line by line. But in this particular scenario, they decided they reported an increase in adjusted gross income, and then they also reported a significant increase in their itemized deductions. So that's the scenario in this tax return. However, we will go through each line step by step. So before we go through this, let's break this down into manageable chunks. So the way I've laid this out in our article, which you can use step by step with this video, is at the very top we have taxpayer information. In the middle we have the amended return filing status. And then towards the bottom we actually have the changes that you apply to your Form 1040. So this will look familiar because this is pretty much the order that it would appear in your Form 1040. Income and deductions, tax liability, payments, refund or the amount that you owe. And then on the back is Part 1 for dependents, Part 2, explanation of changes, and then finally at the bottom, taxpayer's signature as well as your paid preparer signature, if applicable. So at the very top of the form, we've got either a calendar year or a fiscal year. So if this were a fiscal year return that we were ending, we would enter the month and the year ended. So let's say that this is a fiscal year. The way the federal government operates, the end of the fiscal year would be September 2023. That's how you would enter that here if you were a fiscal year taxpayer. This is for the 2023 tax return that John and Mary Doe are filing. We've got their social security number information right here, as well as their home of record. If you need to, you can include a foreign country name, province or state, and then the postal code. So I normally advertise that if you've changed your address, then you should notify the IRS, and one of the more common ways to do that is by filing IRS Form 8822, which is the change of address notice. However, in this situation, because you are updating your address with an income tax return, you can actually file an amended tax return, and then the different address in that tax return will update the IRS records for you. So this would happen if you're filing a Form 1040 or if you're filing a Form 1040X. If you're still interested, I'll put a link in the show notes to the resources we have on the change of address form, but you don't need to do that for this tax return. Over here in this little corner is an area for a presidential election campaign. So you can check here if you or if your spouse filing jointly didn't previously want $3 to go to the presidential election campaign fund, but you do now. It won't change your tax refund, your tax liability, or the amount of refund that you get. This doesn't come against you, but you can check. So if John Doe wants to, but Mary does not, she can abstain from doing that. You can both check, but what you cannot do is check any option that would revoke your presidential election campaign the election. So if you previously elected that, you can't go back and uncheck that box. In the middle, amended return filing status, you have to check at least one box, even if you're not changing your tax filing status. So usually you cannot change your filing status from a joint return to a separate return after the tax return due date. You can do this beforehand, but you can't do it afterwards, generally speaking. So you do have to select between single, married filing jointly, married filing separately, head of household, or qualifying surviving spouse. So if you are married and file a separate return, you're generally reporting only your income, deductions, and credits, and you're only responsible for your tax. But if you file a joint return, now you and your spouse are responsible for that tax and penalties on the return. Or if one spouse doesn't report the correct tax, the other spouse may be held jointly responsible for additional taxes that you might owe. So if you do change a status here, then you would reflect, changing tax statuses in part 2. Okay, so in part 2, when we go over that, you're going to document every single aspect of what you're changing. If you believe that you may be impacted by your other spouse's tax debt, you can additionally file IRS Form 8857, which is the request for innocent spouse relief. If you're changing to head of household status, then there are additional instructions in our article. Also, changing from a joint tax return to married filing separately, we do have additional information in our article, which we can go through. You can go through that offline. If you check the married filing separately spouse, then you should enter the name of your spouse unless you're filing a Form 1040 NR. If you're checking the head of household or the qualified surviving spouse, then you would check the child's name if the qualifying person is a child but not your dependent. So, if you're married filing jointly, you would put Mary Jane Doe. So we're not filing jointly, and for the simplicity of this, we're not claiming any dependents. So in lines 1 through 15, you'll see that there are 3 columns. And then on the next page, there are 3 columns. So once we get to line 16, it kind of collapses down to 1 column, and we'll walk through that accordingly. So column A is the original amount that was on your previous tax return, or if the IRS came in and made an adjustment, then it would be the amount that the IRS adjusted. If you're amending an amendment to a tax return, and yes, you can do that, then you would put the most recent amendment amount. And I believe the IRS instructions actually say that you can amend a tax return up to 3 times in a year. I've never seen or heard of that. Kind of figure that most of the time you get it correct the first time around. So, or the first amendment. So we'll go through step by step again. John Doe and Mary Doe, increase their adjusted gross income. We'll just say let's imagine that their John Doe's Form W-2 was corrected after he filed his tax return. So let's go through the adjusted gross income. If there's a net operating loss carryback, make sure you check this box. Otherwise, you would report. So the way it reads here is that John Doe's and Mary's original tax return reported $80,000 of AGI, or adjusted gross income. There was an increase of $5,000. So now the new amount is $85,000. So One thing that you should be careful about is as you make adjustments to income or other items, you need to be aware of the possible impact that this could have on tax credits, other deductions, things like income-based phase-outs may happen, your tax liability, particularly if you're using tax tables, will definitely change. So just keep an eye on that, and kind of think to yourself as you're completing this form, like step by step, what other aspects will change. So itemized deductions or standard deduction. So this is not based in reality. I know that the itemized deductions are completely different. The threshold for the standard deduction is much higher than this. This is simply to illustrate a point. So let's just say that they originally reported $10,000 of itemized deductions. Maybe John Doe just completely brain farted and did not realize that the standard deduction was higher. But in any case, he also forgot that he made additional contributions, and he was reviewing his checkbook and discovered a $15,000 check that he made out to his favorite charity, and for some reason he just completely forgot. So in addition to reporting the increase on his W-2, he's also going to report an increase in his itemized deductions. So now he's got $25,000 of itemized deductions as opposed to the $10,000 that for some reason he was claiming previously. In line 3, you're simply going to subtract the difference. So $80,000 minus $10,000 is $70,000. The net change, is a $10,000 decrease. So $60,000 is the new correct amount. And all of these calculations add up properly, so we're okay. In line 4B, this would be the qualified business income or QBI deduction. We're not claiming that for this, but if you did, then it would be something like, let's just say that you had $1,000 QBI deduction and we went back and refigured it and now it's increased to $1,500. That's what it would look like. So for the purpose of this, we're not doing the QBI deduction. But if you did, it would be on either IRS Form 8995, which is the simplified computation, or IRS Form 8995-A, which is the more complicated form for certain taxpayers that can't use the simplified computation. In line 5, we're going to calculate the taxable income. You can simply subtract the line 4B amount from line 3. In our situation, everything remains the same. Now, if this column C amount is 0 or less, you would enter 0 here. Now, when it comes to tax liability, we determine that, from the tax table, which the instructions specifically state, entering the method that you use to calculate your tax. So if it was a tax table, that's different. If your income is above the level that would normally warrant tax tables, then maybe you used the tax computation worksheet. You could have used the Schedule D tax worksheet, the foreign earned income tax worksheet, qualified dividends and capital gain tax worksheet, IRS Form 8615. So we'll put links to some of these references in the instruction or in the show notes. There's also an entire table of what you should put here based on the method that you use to calculate your tax. So in this case, for line 6, we pulled this information from the 2023 tax tables. So pro tip, make sure that you're using the correct tax table for the correct tax year. For example, if this were the 2022 tax year, then we would be using 2022 tax tables. So when I pulled that up, the original amount based on this $70,000 was $79.63. The new amount based on $60,000 was $67.63. And that looks like it's a difference of $1,200. In line 7, we didn't report a change in any non-refundable credits. We simply had $1,000 that did not change. We hit a 0 here. If there is a carryback of a general business credit, you would check this box here in addition to annotating the changes. And then we're going to subtract line 7 from line 6. So in this case, we've got 6963 was the old tax bill. It's now 5763. Line 9 is reserved for future use, so we won't use it. Other taxes in line 10. This could include anything that would be on your Schedule 2 for the tax year that you're amending. So if you made these changes, you may need to go back to Schedule 2 to determine any other changes to taxes that were impacted by your change to income and deductions. So in this case, no change happened. So we do have $500 of additional tax that did not, increase or decrease. So our new and old tax bills increased by $500 accordingly. So now we're into the payments. This includes any tax withholdings, any estimated tax payments, refundable tax credits, and then any amounts that you paid when you filed a tax extension or you paid with your original return, or any payments that you might have made after filing your return. So in this case, nothing changed. We're reporting that $5,000 of income tax was withheld during the year as reported on his Form W-2. When we got his new W-2, we didn't see any change in withholdings. We just saw the change in the income. Let's just say that he had $1,000 that was applied to this year's return from his prior tax year return. It could be that. It could be estimated tax vouchers throughout the year. So you would enter that here. No change for us. Any refundable credits, so the earned income credit is separate here because that might warrant a different calculation based on any changes to your income. And then here's a list of other refundable credits that could be applied. So that would include the child tax credit, additional child tax credit, or credit for other dependents on Schedule 8812. Education tax credits on IRS Form 8863, or anything else from Schedule 3. You can also include IRS Form 2439, which is a notice to shareholders of undistributed long-term capital gains. There are some other tax credits. 4136 is a federal tax paid on fuels. You can get a credit for that. There's a health coverage tax credit, which is no longer currently applicable, but may still apply to prior year returns, and then the premium tax credit. So if, for example, we were adjusting a tax credit from Schedule 8812, we would make the change while checking the appropriate box. So we don't have any changes. We're not checking any of those boxes. So in line 16, we're going to include the total amount that was paid, in this case, when John and Mary Doe filed their original return. So let's just say that they paid $1,000 when filing their return. That means their total payments is the sum of $5,000 plus $1,000 plus $1,000, $7,000. Now, just a real quick check. Under the original return, $7,000 would have meant that they owed money. With this new tax assessment, turns out they're going to get a refund. So let's walk through this, and then we'll talk about a couple of scenarios and how this might work out. So the amount of overpayment, which would have been originally shown on the original tax return, or if the IRS made an adjustment, there was no such overpayment. But if there was one that the IRS made an adjustment, you would have received an IRS notice, in which case you would subtract line 18 from line 17 We don't have that, so we're just going to enter the line 17 number. Now, if line 11 is greater than line 19, then this would mean that you owe money. Since that's not true, we put 0 here and we go to the line 21, which reflects the overpayment. $737 is the difference between $7,000 and $62.63. So we're going to apply that to this year's tax return, although you could just as easily apply it to next year's tax return by making that change. So that's how you would do that. Now, if you were originally owed a refund, then the IRS, and then you get an additional refund, let's just say that they were already expecting $1,000 of their tax refund. This $737 would come as an additional payment. It would not be combined. So if you're expecting a refund from your original return and your amended return, expect that to come in 2 different payments. So in part 1, there's a lot of lines, only 2 of them are used for dependents. And again, if you have to change the number of dependents, then you would change, let's just say, from 1 to 2. Maybe you forgot a kid. Sometimes it happens to newborn babies, right? Like, oh, there was a kid that was born in December 30th. I forgot to claim that guy on my tax return. Well, you can, so you should. So you can do that, and this is how you would do it. And then, if there was another dependent, like say the Does bring in John's mother who's elderly and they start caring for her. She's not a child, but she is another dependent if they meet all of the criteria, such as living, with her for more than half of the year, unless she's in a nursing home. They support over 50% of her expenses, so on and so forth. Then you would be able to change that accordingly. So if you do have dependents, you're gonna input all of that information. Let's see, Sarah. Susie Doe, and then her social security number. Let's just say it's, there we go. And then you would check the applicable box. Let's just say that she qualifies for the child tax credit. You would put that there. You can't select both. You shouldn't be able to, although this form lets you do it. But each dependent qualifies for either the child tax credit or the credit for other dependents, but never both at the same time. Now, if you have more than 4 dependents, you should see the instructions and check here. But basically, you're going to list all of your dependents regardless of what changes that happen here. So in this case, they're not claiming any dependents. So this information really is, we just did this for illustrative purposes. It's not supposed to be factually correct. And then for every change that you indicate here, I forgot to mention John received there's no, the IRS gives examples in their instructions, but there's no standard template for what changes you're supposed to provide. You're simply going to annotate based on the changes. So if one of these doesn't apply, then you take that out. But for each change that you make, you should report what that change is. So John received a revised W-2. They increased their itemized deductions, and maybe they claim little Susie as a dependent. New baby, right? So you can put that, the IRS just is not very particular on the exact verbiage. They just want to understand in context what changes you think you're making so that they can then track to make sure that everything you did was correct. And then at the bottom, you're going to sign and date. If you filed a joint return, both spouses have to sign, enter your phone number and email address. If the IRS sent you an identity protection PIN, I'm sure it's not going to be 1, 2, 3, 4, 5, 6, but it is a 6-digit number. You would put that in there. And each spouse should have a different 6-digit number, and I'm pretty sure that Mary's would not be that. And then if you're using a paid preparer, they will complete their information, including their name, their preparer tax ID number, their firm's name and information, employer ID number. So if you filed your original return electronically, you should be able to follow the instructions in your tax preparation software. If you filed a paper return, then you would have to file specific instructions. If you received a notice, you should file based on the notice. If you are filing a paper copy of a return, if you filed a paper original return, then you have to file your amended return by paper. If you filed electronically, you can file by paper or by electronic means. But if you file by paper, you're going to mail this to the appropriate IRS office based on where you live. And you can find that information under the file, how do I file IRS Form 1040X section of our article. We go step by step into detail about that. So that's all we have for this video. And I'll scroll back to the top. But everything that we mentioned in this video, or as much as possible, if there are additional forms and resources, I'll put links to those in the show notes. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions, comments, or if there's anything that I can help you with, if there's a topic that you'd like to see in an upcoming video, please hit me up in the show notes or in the comments section. Thank you very much and have a great day.